Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So today we have Niko. Now I lost it. I lost it. You're gonna have to say it for me.
Tsiplakos, yeah.
Tsiplakos. Okay, thank you, Niko. So it's great to have you, and I am very interested to talk to you because we have a lot of things in common, a lot of people that we know that are in common. So it's great to have you. If you want to just go through your history of how you got into mortgage lending, that would be fantastic.
Yeah, appreciate it, Bruce. Thanks for having me on here. My background in the commercial real estate finance space kind of stemmed more so from your kind of traditional banking process into then the broker side of it. So I graduated from UC San Diego in 2016, and right out of college, I worked for a smaller private bank down in the San Diego market, focusing on small balance kind of business loans, think equipment finance, lines of credit, working capital loans, things of that nature. Ultimately, it was sitting on the phones for 4+ hours a day, making 100 calls a day, just dialing anyone that I could everywhere to help
Anywhere,
see
everywhere, all at once.
all at once, just like the movie. And it really helped to kind of expand my knowledge base in that industry, and it helped me to segue into a more corporate style position at U.S. Bank in the San Francisco Peninsula here, where I moved up back from San Diego, moved up to San Francisco, where I'm from originally. Back in 2017, I think I made the move, 2017-ish. Yeah. Worked for US Bank Small Business Banking Division. I covered 11 branches, which accounted for a few thousand small businesses here in the peninsula, and ran the branches as their small business banker. So I focused on businesses with revenues up to about 20 million or so is kind of where it would tap out before it would go into the emerging markets team. Focus on small balance transactions such as your loan sizes up to 250,000, with an emphasis on demand deposits, so your business banking accounts, credit cards, lines of credit, other equipment financing, and business capital needs too, and with some commercial real estate financing sprinkled in there. Worked there for a little over 2.5 years before I wanted to really get into more of the higher value, higher volume shop, such as Slack Capital. So I interviewed at Slack Capital early 2020, and I got hired. And this is a fun, interesting fact. I got hired at Slack Capital on March 5th, 2020. And
Oh,
yeah.
oh God.
So I passed my real estate salesperson's exam, March 4th, whatever it was. Got hired right on March 5th. 2 weeks later, as you know, we get the infamous shelter in place from COVID-19. And so my management team is like, okay, we're going to send you home because we have to send everybody home in the office. And they sent me home for 2.5 months. And yeah,
Oh,
really, really interesting time to be starting out in the brokerage side of my career at that stage. Finally got the call back from management to come into our office here in Burlingame and start, the real kind of prospecting and hunting that I do on my side of the business now. And so I've been at Slack Capital for 6 years here and kind of worked my way up. Like our company, what I do now is I focus on debt and equity placement for commercial real estate investors. Our kind of sweet spot is mostly the middle market, so transaction sizes that range anywhere between 1 to 50 million is kind of how we loosely define the middle market. I'd say our emphasis really comes to like the $3 to $30 million mark. That's where we have some fantastic programs, loan programs through our lending sources. We represent about 30 or so correspondent lenders. So these are lenders that the general public doesn't have access to. They have to work through a commercial mortgage banker like myself in order to get access to those programs. So these are insurance companies, banks, credit unions, CMBS, agency, and our own internal debt fund that we have as well. So very specific programs that are really solid in today's marketplace, I would say. But yeah, that's a little bit of my background, kind of what we focus on. I'm here in the Bay Area at our headquarters in Burlingame, California. I have an emphasis on, or really, I'm hyper focused on Bay Area transactions, so Bay Area financing needs. But I'll go all throughout California, and I've done several out-of-state transactions, kind of follow where my clients go if they're investing in those markets.
So what are you finding the current market is looking like these days?
In regards to financing, it's a pretty liquid market. We just attended a major, our company just attended a major conference down in San Diego called the CREF, or Commercial Real Estate Finance Conference, where we met with 40 plus of our lending partners. And the overall theme of that conference was that lenders are eager to put capital out into the marketplace today. They have all new allocations for 2026. They're all trying to beat their previous records that they got in 2025, or at least, up their production numbers. And so that typically leads to some positive movement for investors, commercial real estate investors, specifically around how the lenders are going to be pricing their deals, because they have so much capital and because they need to be a little bit more competitive in today's market. You're seeing compressed spreads, which is leading to lower all-in borrowing costs, and the lower all-in borrowing costs translates to better returns for investors, deals starting to pencil that weren't penciling before at higher interest rates, and acquisitions starting to make sense again. So we've seen across the board an uptick in activity, not just from a refinance standpoint, but also from purchase financing requests that are coming in too.
What about development sites?
Starting to re-enter the market as well. I've looked at a handful of development deals, primarily in the multifamily space here in the Bay Area, that again weren't penciling before, but now with the cost of capital declining and prime rate specifically, which is a big variable factor in how interest rates for construction loans are determined, that and SOFR, of course, it's made it easier for, or more palatable for, the developers to now take out a construction loan that's not in the 9% range anymore. It's in the high sixes, maybe low sevens, if you can get the
Wow.
really good pricing.
Wow. So yeah, so that activity is starting to pick up. Well, I don't think construction costs have come down, but that's still a factor involved that's slowing down construction. But anyway, it's good to hear that people are starting to ramp up their development projects a little bit more. So that is a very interesting combination of things, but you're seeing more and more multifamily work coming out, and that's very encouraging. And this is throughout California, right? Or is
Yeah,
there?
I'd say across California, multifamily is still retained kind of the number one spot from even just lenders' appetites, not just from a development standpoint, but also from the appetite of their most favored asset class that they'd like to lend on. If I were to rank kind of the core four food groups, as I call them, you've got
Yeah.
multifamily on top, and I still think industrial is a close second, but I think retail's also kind of come into play
Yeah,
here.
retail's hot
Um,
right now.
it very much is, and it's been a really nice kind of asset class to focus on over the last couple of years. But there's still something about industrial that the lenders like. I think it's
Mhm.
an allocation kind of component to it. They want more on their balance sheet compared to the overexposure that they may have in retail. And then followed by retail is going to be office, kind of at the bottom,
Yeah.
for at least the core four that I focus on and
Are you
work
are
on.
you seeing any data centers coming in?
The conversations are becoming more prevalent, but I would say that again, for the focus that Slack Capital has, it's those data centers are multi, $100
Yeah,
plus $1 million transactions that probably would fall along the lines of some of our competitors in the marketplace that have just
bigger,
know-how.
yeah, bigger
Yeah,
pockets. Yeah.
yeah, bigger pockets, bigger access to capital, but just in general, like we know our space. Our space is the middle market, and we like playing in that space. Like our average loan size is, I think, 5 to 6 million, something like that.
Yeah. Yeah.
Yeah.
So are you seeing any geographic locations? Is South California or anything happening with location?
Well, we've got multiple offices across California. We've got offices. We have three offices in the Bay Area. So Burlingame, San Francisco, and the East Bay in Pleasant Hill, I think it is. And we have Los Angeles and Orange County, and then one in San Diego as well. So we kind of cover the spectrum of major California markets when it comes to the financing side of it. Our LA office is expanding greatly because it's an incredibly
Lot.
huge market and a lot to cover. So, and San Diego, I would say San Diego is expanding rapidly, not just from our office side of it, but also just in terms of activity. The growth down there has been tremendous because I think that the cost of living is making it easier for some people to move into that market, and so you have a demand for you have a pretty good demand for multifamily, but you also have a really great demand for industrial. There's some industrial zones down in San Diego that are just firing right now pretty well.
So it sounds like Slack is not doing any SBA loans. Yes, no?
You know, we have producers in our office that will take on SBA financing. Our core focus, I'd say probably 95% of our business is going to be investor related, so investment properties, rather than the owner user component. Don't get me wrong, we have the ability to do it. It's just not our forte
Yeah.
for specifically like how our capital providers are financing deals. We can go to the banks and credit unions to look at owner user transactions, but we're a shop that focuses more on investment properties.
Yeah. Well, SBA is a longer term investment and, a lot more paperwork. So I can
Yeah,
see
yeah.
where, yeah, that would be the case. So are you you're into multifamily, you've got the geographic locations going, you're not doing much in the SBA area. So what do you think the famous crystal ball is saying to us these days?
Ooh, $1 million question that I that
Literally.
that I yeah, that I get more times than I'd like to answer. I'll give you kind of, it might be a little cliche of an answer, or maybe a very kind of, I don't it's an answer that I got from my CEO who's been in the business a long time, but it's the best advice I can give in any situation. It's um, there's a 50% chance that the market could go up, rates can go up, and there's a 50% chance that rates can go down. And yes,
I like this answer. I like this answer.
it's, and I say this to almost everyone that asks me this question because the reality is I can't speculate where interest rates are going to be.
No.
I don't know what macroeconomic effects are going to take place in the next 2, 3, 4 months, whatever that might be. That's going to have a direct impact on where treasuries sit and where interest rates are going to lie. I don't have that crystal ball. So my role is an advisor role. Yes, we are a brokerage, but our role is an advisor role to help investors make the most informed decision that they can based off of today's data and where today's rates are, and structure. Of course, we structure the deals accordingly, but that's the best way that I put it in front of my clients.
No, I think that's a great answer. I assume you're seeing a fair amount of loans coming out of these low interest rates that have to be refinanced and going from whatever 3% to 6% can be, a fair bump for these people, but they have to do it, right?
Yeah, yeah, we are hitting kind of the first leg of the 5-year fixed rate debt that was taken out in 2021. that now has maturity dates in 2026. There's an 860 something billion-dollar wall of maturities that are hitting this year
Whoa.
alone,
Wow.
in 2026, and that's just made from public data. That's not including the loans that might not be listed with public data with maturity dates, for example. So it could be even more. But yes, that is a real issue that is happening today with some of the borrowers who took very low interest rates back in 2021. Let's call it 3.5%, whatever it might be. They levered up because they were able to. So they got 65, maybe even 70% LTV in some cases.
Oh, yeah.
But the challenge that they have now is rising costs associated with their property, whether that's insurance, utilities, whatever it could be, coupled with rising interest rates and let's call it low principal pay down for the 5 years. They don't have the ability to refinance that same exact balance. So that balance that they have right now is being situated more as a cash in refinance scenario.
So I hope, are you seeing that, well, particularly in multifamily, hopefully they put away some money during that time and they have some cash that they can put back into the deal because it sounds like they're not going to get as much loan out of it.
It's multifamily, it's industrial, it's retail, it's office. They're all facing a very similar challenge. And that has created a lot of friction with owners right now because that position that they're in, it they either have what I call one of three options that they do. They either can look to maybe refinance and do a cash in situation. They can bridge it with higher cost of debt. And, if they wanted to somehow find another solution around that with a short-term option, they could look at doing that. Maybe there's some other properties that they have to rearrange during that, shorter term bridge loan that we look at, help to pay off some of the debt that's on their other asset. Or the third is they sell the asset because they can't
Right,
afford it. And I
right.
and I feel that that's why there's a lot more on market listings that have these loans technically on them that are coming due very soon. So the conversations are happening. Are my investment sales brokers connections? They're saying that they're having conversations with many of these owners months in advance to prepare them because they'll come to me and they'll ask me to run a financing scenario, and if the financing scenario doesn't work for the refi, then it's a way for them to have that conversation with the owner about listing the asset
Mm.
for sale. And so that's been a big component of what we're seeing in today's market. But lower rates have kind of helped create, allow for it to not be as big of a challenge for these borrowers. But it's still a very, very big challenge that we are facing.
Wait a minute, I want to back up just a second here. So are you saying the real estate brokers come to you and say, "Hey, here's a property. Tell me what happens if this is refinanced. I'll go back to the owner and tell them where their numbers are going to be,
Yeah, yeah,
and they either have to sell it or they don't sell it or they refi."
yeah. Yeah,
Yeah.
so I have connections on the investment sales side as well as the property management side that will engage me for just advice around refinancing an existing loan because the conversation comes up with what their discovery looks like when they have conversations with owners. And they'll come to me and they'll ask what we think can be done, where the loan amount would pencil based off of today's rates and where the operating history looks like for the property. And I'll share with them, look, this can get refinanced. They're in a good spot. If it's something that we can help out with to refinance it, great. That's a referral over our way to tackle it. Or hey, there's going to be a cash in scenario here for your property owner. You might want to have the conversation with them about potentially listing it if they don't have that capital available, or if they don't want to pay down the balance and right size the loan when it comes due.
Wow, that's interesting. So I'm curious, how are you marketing yourself other than this fantastic podcast?
Oh, this is certainly one way. But my early career, I was probably making 40 to 50 phone calls a day, cold calling on property owners in California. Every market didn't really mind where I was calling. And then I started to kind of compress that into the Bay Area. So I'd say I focus 65% of my phone calls now into the Bay Area, with the rest kind of spread out through California. So cold calls are a big measure of that, but I've built up a very great resource of referral partners from investment sales brokers in the marketplace, as well as property managers, including residential mortgage brokers, and also CPAs and other individuals. And then part of a few other organizations involved in commercial real estate, NAIOP, ICSC, provisors, so things like that.
I was in my provisor group yesterday. So Palo Alto too. You should
Oh,
come
very nice.
at Palo Alto too. We'd love to have you. Which group are you in?
I'm in SF11.
SF has how many? Gosh, so many groups. Anyway, uh, well, that is very interesting. I'm curious, are you using AI at this point?
To some extent, we've had a lot of AI service-based companies reach out to us to see what we could use. I'm currently using or trialing a platform that kind of helps with email marketing. To they scrape emails that have been inactive for 2+ years,
Uh,
and they'll cycle through and send kind of automated follow-ups to those prospects, and maybe maybe it'll you know maybe I'll get a response, generate a response out of it. That's something for me to follow up on, maybe, resurface a lead or whatever it is. I've used other services. I've used a company like Terracotta that helps automate the phone calls in the past, and ChatGPT is another one. But we're also kind of digging into maybe using Claude a little bit more, and how Claude could help from a financial modeling standpoint. And then we have kind of an internal individual on our team that we're at least part of SLAT, that is working on enhancing kind of our AI features and how to integrate some of those services into our business. So and then our marketing packages, that's another big one. We have an AI software service that puts together our marketing packages. Very clean, very nice, really well put together. I've got nothing but
no, I've been always
great
impressed
news.
with AI's ability to do a marketing package that just crazy, ridiculous what happens there. So I assume you use a CRM of some sort.
We do, yeah. Our internal CRM is Salesforce based,
Yeah.
but we've built it out to be proprietary to our type of business, and it's actually a really fantastic tool that we use, because for every producer within Slack Capital, anytime they have an active ongoing deal that they've got logged into the system, we log all of the quotes from the lenders that we get
Oh,
for those deals.
oh
And
wow.
so every quote that's logged into our system can be categorized, searched based off of area, asset type, lender type, term, amortization, whatever we want to search for. So, for example, Bruce, if you've got a property here in San Mateo that's retail related, and you wanted some general information on what retail rates look like for multi-tenant retail properties
Hmm.
with 5-year fixed rate debt, we can gather quotes over the last 60 days, very specific to that. So it's providing you with real-time data on where the market pulse is for interest rates and lender appetite. And that's something that we share directly with our borrowers or prospects that we talk with. It's like, hey, look, we have access to this information. It's available. We know where the market is. So it's kind of hard to BS us too. So, like,
Right, right. You're
if
like,
you've got an offer on hand, and then you're telling us one thing, but we know where the market is, like, we'll give you the data, we'll share it. We're very open with sharing the data, because we find that data drives business, and it's helped me definitely build trust with a lot of my borrowers and investors that I work with. So
well, it sounds like you're doing a lot of transactions. Can you give me some sense of how many transactions are going on these days?
personally, yeah, I'm probably averaging close to like 18 transactions a year. Just and that's been pretty average for me over the last 5, 6 years. I think that's a combination of where the market tends to be today, or actually where it was, kind of a weird, funky market that we've been dealing with.
Right.
We're starting to feel the market pick back up. I have about 4 or 5 deals under application currently, with probably let's see, 6 or 7 deals out to market right now. So we're bidding on pricing at this point with 6 or 7 different deals, and of course there's a myriad of others that I'm constantly looking at that I have to categorize and spend my time appropriately on. But yeah, deals are flowing in, which is great. So I think it's going to be a good year for the capital markets.
So let's go back to that number. Did you say $800 billion wall?
There's a $865 billion maturity wall. So maturities, CRE maturities this year alone, and it's probably well over $1 trillion if you included other, components of CRE debt that's in there, which
Right.
I mean, there's going to be a lot of restructuring. There's going to be a lot of sales taking place, but a lot of these loans are also loans that were put on this extension from many of the lenders last year. If you remember, there was a phrase that was going on in our industry, the extend and pretend, or extend till 26, right? Whatever it was that was happening. And the harsh reality is these lenders are no longer wanting to extend these out. They don't want them on their balance sheet anymore, so they want them off. And so they're going to probably be a little bit more strict on what loans they're willing to extend and what loans they're saying we need out. We need to get out now. So
Yeah, we've got better places to put our money. We want our money back. Thanks, but no thanks. We're ready to move on. So, well, that's very interesting. Okay, Niko, where can our listeners get a hold of you?
yeah. I am listed on LinkedIn. I'm also listed on our website at Slat Capital, or at slat.com. My email is just my first name dot last name at slat.com. And then my phone number I have available to the public. You can find it. 650-443-9041 is my direct line here at Slat. And I'm always open for a phone call. So if it's a conversation you want, I'm happy to make it happen.
So if you're refinancing or looking for a loan, call Niko. Niko, I think, is the answer here.
That's why I make it public.
You have a friend in the loan business. So
That's me.
well, Niko, it's been great to talk to you.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.